Hey everybody, back with another dividend analysis, and today we're going to be looking at Caterpillar Inc., or CAT, or more simply CAT. Wanted to take a look at Caterpillar because in particular, their dividend growth over the last few years has been kind of interesting, so I thought it was worth taking a look at. As always, we'll start by taking a peek at the yield, currently sitting at just above 2%. Nothing to write home about, just barely beating out the wide market. Just technically a dividend stock, as I've told you guys before. Once you get under 2%, it's not really a dividend stock, it's just a stock that happens to pay a dividend, but we're still sitting above 2%, so we're going to consider this a dividend stock for now. Looking back over the history, we can see that we're currently getting about $1.11 a share, whereas 8 years ago we were getting 60 cents a share. So the dividend has almost doubled in that 8-year period, and as we can see, the increases have mostly been, we got a 10-cent increase, a 7-cent increase, then a 1-cent increase, then an 8-cent. Mostly, these 7-cent ones are 7 to 8 cents seems to be the average, but there were some big ones in there, getting a 17-cent, and then sometimes when we just got no increase and a 1-cent increase. So it's a little bit all over the place with the increases, but it has been increasing as we've gone along. 2020 and 2016 did see some stops in the dividend increases, so it's not a dividend aristocrat by any means, or a dividend king by any means. It's not increasing the dividend every year, but it is increasing the dividend over time, not particularly year over year, but years over years. So keep that in mind going forward. Next, let's see if they're able to pay out those dividends. Currently, Caterpillar pays $2.4 billion in dividends. Let's see if they're able to support that. Looking at the free cash flow, we can see that back in 2016, we were getting about $2.7 billion a year in free cash flow, and currently just at 4.2. A lot of growth here, up almost every year, just a little tiny dip between 2019 and 2020. We still don't have 2021 full year numbers yet, so that's going to be good to look for to see if that cash flow is still increasing. But really big increases in free cash flow over the past 5 years. Very good to see. Doing our ratio of free cash flow here, we can see that we're sitting at about 57%. Not ideal, but definitely acceptable. 57% of that free cash flow is being paid out in dividends, so there is plenty of room if they do want to increase the dividend further another 5, 6, 7, 10 cents. They're going to be able to do that. If the free cash flow dips a little bit this year, it's still going to be safe. It would take a big drop back down to these 2016, 2017 numbers for that dividend to be in any kind of jeopardy. Next, taking a look at our income, we can see that income has also been a little bit spotty but increasing. We had a loss back in 2016, but then gains up to $6 billion and then back down to $3 billion, and probably a lot of financial gerrymandering here, probably some write-offs, things like that. But if we do our ratio of income, we can see that we are currently getting about 80% of our income being paid out as dividends. That is a little bit iffy there. Of course, we want it to be under 75% to be in our acceptable range, so 80% is a little iffy. If that income does fall there, we're going to have some issues not being able to pay it out as income. They're going to either have to be doing things in the free cash flow line, moving money around, stuff like that. Probably not going to have to take on debt, but just keep in mind that at 80%, there's not a lot of wiggle room there. We really want to see this increase. If we could get back up to this $6 billion number, that would be great. Of course, 2020 was an anomaly year, so that it is very likely that they will increase that year-over-year number, so just keep that in mind going forward as well. So what does Caterpillar do? I'm pretty sure everybody knows, but they make construction equipment. They also do things like make turbines and control systems for trains, but pretty much when you think about it, big industrial equipment is what they do. Driving around, you're probably going to see a Caterpillar on any work site that you happen to drive by. They're a household name. They're a large established company. No real danger of going out of business anytime soon outside of something like mismanagement. They are definitely an established company, so just keep that in mind. So who is this for? Should you be looking at this particular ticker. From the growth mindset, over the last 8 years, there's been a ton of growth with the dividend nearly doubling. So there aren't many stocks that are doing that, so that is very nice to see. On the income side, it is pretty low at just 2%. You're not going to be getting a ton of income here. This would really be something as a diversification tool for someone that manufactures industrial equipment. If that's something you're looking to add to your portfolio and you happen to like dividends, this would be something to look at. But otherwise, from the income side, there is not much here. Looking at the actual stock, just note that it is trading at pretty much all-time highs. So you did miss the big run-up, and we don't know if that dividend is going to keep increasing. As we saw, the income last year was kind of rough, but they did increase the dividend in 2021, so that's good to see. Otherwise, has the ship sailed on the dividend increases? That's really yet to be seen. We really do want to see those 2021 numbers, see if the income returned back to the 2018, 2019 numbers, and see if that free cash flow continued to increase. If so, I would expect them to continue increasing the dividend. If not, it will be a bit iffy, but that remains to be seen. Otherwise, it is, again, a very well-established company, has a market cap of about, $110 billion. So yeah, it's not a safe bet, but it's definitely, when it comes to dividend stocks, one of these safer bets. Again, 2%, not super high up there, but again, a diversification tool, maybe something to look at. And as always, thank you all for watching, and I'll see you next time.